Hi there, eToro. It is Monday, and that means it's time to take a look at what moved the markets last week. Beginning with statistics. So for the trailing 12-month period, as of the beginning of last week, the S&P 500 has put in a return of 32%, whereas my portfolio has given a return of 34%. Taking a quick look at the 1-week performance of positions. So a lot of the drops and rises through the past week have been determined by earnings. So NVTA, Coupang, Disney, they all had earnings that disappointed. Whereas on the reverse side, Douyin only reports earnings this week, I believe. But GoPro reported great earnings. ASOS rose for other reasons I'll touch on in a moment, and Cineworld is just massively up today. Taking a look at the macro data that hit the public for the UK last week, we can see that GDP numbers were published and they weren't so great. They weren't terrible, they weren't massively off the mark, but they weren't fantastic either. In terms of other goings on, the UK has a very high level of vaccination, and now we're seeing a booster shot being offered to a large part of the population. I heard on the radio today that they are now extending this to the over 40s group. So that'd be me, unfortunately. So this is great, and the data showing that this is definitely working at keeping deaths very, very low, hospitalizations very, very low. Although we're seeing a slight uptick in cases at the moment, probably because of seasonality. We also saw the end of the COP26 conference. It ran for a day longer than anticipated because they were working hard at getting an agreement amongst the many participants. And in the end, we got a fairly decent result, at least something that's going in the right direction. Many people will say that not enough has been done. But in the end, 196 parties agreed to what is being dubbed the Glasgow Climate Pact. There are some very concrete terms around what this means, although many countries tried to back out of the concrete obligations. But overall, it means that the plans to decarbonize many countries around the world will now be accelerated. Now, what remains to be seen is what those plans actually entail, but we'll get a view on them 5 years earlier. So to me, that is a pretty decent result. Coming back to individual UK stocks, so ASOS popped last week because they reconfirmed their ambition to expand internationally, as well as nearly doubling their revenue through the next few years. It's strange to me that something as simple as a statement saying we confirm our original statement is strong enough to push the stock up, or any stock up, so high, but it seems to have done the job. I continue to be a strong believer that ASOS is massively undervalued. But I would like to see a new CEO installed as soon as possible. Cineworld is popping. This is not news from last week, but because they've just published some data this morning. Usually I would leave this for next week, but just the sentence summary is that the ticket sales that they're seeing are much better than anticipated. Over to the US now, and probably the most interesting thing that happened out of the US last week at a macro level is that inflation came in at a level that hasn't been seen for, I think, 31 years is the precise number. I created a video about this last week, and I'll link to the video so that you can have a little look at what this means and whether it truly is transitory and what that might mean over the coming quarters. For a while now, I've been saying that it looks as though earnings growth in the US is peaking. It's reaching its apex, and that we don't necessarily need to be afraid of this. It just means that earnings growth will continue, but probably not at the rate that it has been growing at through the past few quarters. It does look like earnings growth is still going to be strong through the US, and earnings revisions in the US, it's not on this picture, but the earnings revisions, the upgrades, have been much stronger in the US than in most other regions, for example, Europe. Earnings continued through last week, but there weren't a large number of the companies in my portfolio reporting. Probably the most interesting of those were NVTA, never sure I'm pronouncing that right, but stock ticker NVTA, as well as Disney, and I know that I'm pronouncing that right. So very different types of companies. Disney to me is a growth story together with a recovery story. I don't think the company needs any introductions. The earnings results weren't fantastic, but they weren't terrible either. And it looks as though the company is definitely headed in the right direction. I think we're going to see some decent numbers from Disney through 2022. NVTA, on the other hand, is a company that is trying to change the world. They're trying to do something that no one in the world has really ever done, and at scale. Doing what they need to do is very expensive, and I think they've hit a few hurdles along the way, but their growth numbers are fantastic. So they're high risk. Will keep my position fairly small because of that risk, but it looks as though they are headed in the right direction. A company that I haven't spoken about recently and that I don't yet hold in my portfolio, but I came across this company when I was investigating investment in the nuclear energy industry, is Babcock and Wilcox. This is a big company, and I'm sure many of you have heard of this company before, but it isn't one that's ever been on my radar, really. The reason I was watching them is because some of the nuclear energy analysts that I have spoken to, people that work in the industry and run these projects at massive scales, they tend to talk quite favorably about Babcock and Wilcox. I haven't dug into the company very deeply, but their last earnings report really piqued my interest. And the recent earnings have been so fantastic that they popped and broke through the recent 52-week high. So this is a company on my radar. I plan on spending the next few weeks deep dive in the company. If anyone has any other insight about the business, I'd love to hear about it. All right, on to China. So we saw quite a few solar names popping last week, big jumps. Probably the largest of these being in CSIQ, Canadian Solar, which is a very large solar business, as you can guess by the name, but that has deep ties to China. And the stock price has been punished through most of this year, I think, because of those ties to China. And last week we got great news, and that solar manufacturers in Asia won't be subject to any kind of tariff probe. There's one other piece of news that I am waiting on. So for those that don't know, there are currently tariffs on solar imports with regards to the US and Canada. So anything imported from Canada to the US is subject to a tariff if it is a solar product. The Canadian government has asked the US government earlier this year, I think as early as January, to remove that tariff. It would be nice if it was removed. I think we might see another pop in Canadian solar, but the company is so undervalued at the moment that even if that were to not happen, I still think that for the long term, the company is going to increase in value. Beyond the headline that I just mentioned that saw Asian solar stocks and other solar stocks pop, we also saw China and the US agree to work together to fight climate change. This was a bit of a surprise, and I think that many analysts and investors and stock pundits have underestimated the effect that this has had on Chinese stocks through the last week. This is a huge move, and we're seeing the tone of the China-US relationship shift slowly and ever so slightly. This began a few months ago, maybe a quarter out, but the language around this is changing. We're also supposed to see a virtual summit between Sleepy Joe and President Xi of China today. So it'll be good to see what comes out of that. Hopefully it's not too prickly. This is very good news that the relationship is improving, because President Xi is going to be around for a long time, especially given recent developments in Chinese politics. All right, on to the rest of the world segment of the video. So I've lumped gold into this category. Gold has been climbing recently, and this is because inflation around the world is obviously happening now and at a fairly high rate, and gold is finally doing its job as an inflation hedge. As we see rates increased around the world, I suspect that gold will continue its run. The price of gold is closely tied to the real rates, but it also tends to rally towards the end of the year. Just an FYI. Since I've lumped gold into the rest of the world, might as well do the same with oil. So oil prices have been a little skittish recently, and this is because there is increasing pressure on President Joe Biden to release the reserves that the US has. There's a weird political game being played around oil, but the US has quite a lot of oil if it really wanted to use it. And as inflation rises, the pressure on the US to do this becomes stronger and stronger. So I will stay well away from oil while this little piece plays out. I mentioned a few weeks ago, maybe 2 weeks ago, that the CEO of VW, a man that I admire for the work that he's done at that company recently, was in trouble, particularly with the unions within Germany. He's since backtracked on a statement that he made earlier and is playing a bit more friendly with those unions. So it looks as though he's going to continue being in that position. This is important because I think VW is a great company to invest in, particularly under his leadership. If there was a leadership change, then I might change my mind. There's a lot of interesting data that's landing, macroeconomic data that's landing this week. So looking towards what will happen through this week, we can see this has already played out, that the Chinese data, industrial production year on year, is up higher than forecast. We can also see that within the UK, we're going to see CPI year on year, so inflation data, as well as retail sales. So the market, I think, will watch the following most closely: the economic data out of the UK and the US on Tuesday, the CPI data out of the UK on Wednesday, jobless data out of the US on Thursday, and retail sales out of the UK on Friday. We're also still in the midst of earnings. They are definitely slowing down, but we're going to see some very interesting companies in my portfolio reporting this week, particularly some of my Chinese names. So Douyu, we can see, will report tomorrow, and we have Alibaba reporting on Thursday. Chinese stocks got a little boost last week because of the record sales that were seen through Singles Day, one of the first Q4 shopping holidays. I think the rubber is about to hit the road, and after all of the legislation that China has laid down through this year, we're going to get the first quarter for these companies showing how they're doing operating within that new legislative regime. For the past few weeks and months, the world has watched as the UK's coronavirus cases have ticked up. Luckily, the number of deaths and hospitalizations have stayed quite low, but now they all seem to be trending downwards after having a society that was completely unrestricted, just about. However, the same cannot be said of Europe. So we are now seeing that in certain countries within Europe, restrictions are being re-implemented, vaccination programs are being ramped up, and of course, concern around coronavirus in those areas will increase once again. The world doesn't move on from coronavirus until all countries in the world move on from coronavirus. We are seeing some seasonality because it's winter. People in the Northern Hemisphere are a bit more confined, celebrating, going out for the Christmas season. So it is likely that we'll see an uptick just because of that. I'm still very confident in our global ability to beat coronavirus. Vaccination programs are working very well. And now a number of new drugs have come to the market that seem to be very effective in treating coronavirus. And lastly, I don't want to close on a downer, but I think I might actually. For those that have listened to the news, you will have heard that tensions between Ukraine and Russia are rising once again. Russian troops are amassing, and countries around the world are going to be forced to choose sides. Hopefully, this issue can be de-escalated without too many issues, but on the flip side, it could be the catalyst for something much, much bigger. All right, that's it for this week. Later this week, I hope to publish a video about one of the biggest mistakes that I see investors making in the market. So I'll speak to you soon. Goodbye.